Let's start with the chart of the week here. Now, the last 2 weeks that I've done this, it has been the unemployment data. The unemployment numbers have just been crazy. And you're now looking in 1 month, 20 million people have filed initial unemployment claims. Again, all of this has ripple effects through the economy. It's all going to end up coming out in the earnings statements, not in Q1 as heavily as it will be in Q2. So what I want to do is show you this. The chart of the week is actually manufacturing. Now, I know, for those of you who listened to Power Trading Radio in the past, and you heard John O'Donnell's comments, manufacturing isn't the real driver of the economy. And while it may not be the driver, I think we'd all agree it's certainly a major component. It is a big component of it. So any real change there could create problems. Check out this chart of the week. Here is the Empire State Manufacturing Index. And for those that don't know exactly what the Empire State Manufacturing Index is, it's a collection of a bunch of different data. They basically go to about 200 different manufacturers in the Empire State or New York area, and they basically just give them a survey. And they talk about their sentiment on future activity, economic activity, spending, hiring, and investment, and a few other things. This is important, right? You need to have manufacturing. And what I wanted to, the reason why this one is the chart of the week, is if you look back here into 2009 when we were in our financial crisis, right? The shit was hitting the fan, right? People were freaking out about the markets at that moment in time. Well, we were only down, I believe the number, I get the exact number, I think it was negative 34. Remember, above the zero line means we are expanding as a manufacturing region of the country. Below it means we are contracting. Now, I know we all expected contraction to go on in our economy. Certainly, seeing these numbers drop wouldn't be a shocker to anybody. But we have far eclipsed, right? The lows we saw back in 2009 was only negative 34. We came out today at negative, or this week, at negative 78. So right now, this reeks of pessimism. This reeks of very bad situation going on in the manufacturing area. And mind you, this is just for the last month. We have been in full quarantine for a month, and I think that this is going to continue to some extent. So we could see these numbers drop even more. Again, this turning on the switch, turning on the economy, it's not going to bounce right back in the next month and all of a sudden be positive again. This is going to have a ripple effect, which again is why I've been rather bearish for these markets for a bit, and I do think we're going to see another leg down here in our equity markets. So there you go. That is your chart of the week. The doom and gloom purveyor? I don't think I'm doom and gloom, but it's an ugly picture to be sure. If you'd like to learn more, visit TraderMerlin.com or join us live on our show every day, Monday through Friday at 2 p.m. Pacific on YouTube.